In this video, we will discuss and explain bookkeeping's special journals and ledgers. Special journals and ledgers are organizational tools that streamline recording routine transactions, reduce errors, and improve reporting. Understanding them helps bookkeepers process high volumes of similar entries quickly while keeping the general ledger clean and focused. Special journals group repetitive transactions by type. The common special journals are the sales journal, purchases journal, cash receipts journal, cash payments journal, and the general journal. The sales journal records credit sales to customers. The purchases journal contains credit purchases from suppliers. The cash receipts journal records all incoming cash, including customer payments and other receipts. The cash payments journal captures outgoing cash such as supplier payments and petty cash disbursements. The general journal records transactions that don't fit other journals like depreciation, corrections, and adjusting entries. Each special journal contains columns tailored to the transaction type. For example, a sales journal typically includes date, invoice number, customer name, accounts receivable credit column, sales revenue debit column, and sales tax column if applicable. Totals from special journals are periodically posted to the general ledger, usually monthly. Posting summarized totals rather than individual entries reduces clutter and makes the general ledger easier to audit. Ledgers are collections of accounts. The general ledger holds the control accounts, like accounts receivable, accounts payable, inventory, cash, and equity, that summarize activity. Subsidiary ledgers provide detail behind control accounts. An accounts receivable subsidiary ledger lists each customer's balance, while an accounts payable subsidiary ledger lists each supplier's balance. The totals of subsidiary ledgers should equal the related general ledger control account, a reconciliation that helps detect errors. Using special journals and subsidiary ledgers increases efficiency and internal control. They allow segregation of duties, clearer audit trails, and faster reconciliations. Best practices include consistent column formats, regular posting intervals, routine reconciliations, and retaining supporting documents. In summary, special journals streamline routine transaction recording. Ledgers, both general and subsidiary, organize and summarize financial information for reporting and control. Together, they form a practical backbone for accurate, scalable bookkeeping. If you're learning bookkeeping, practice by setting up these journals and posting sample transactions. Try grouping similar entries and posting summarized totals to the general ledger. Regularly compare subsidiary ledgers to control accounts to catch discrepancies early. For businesses, tailor journal columns to the company's operations and maintain clear documentation. These habits lower errors, speed up month-end close, and support reliable financial statements. Start practicing today.